heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's off. This is Bloomberg Technology. Coming up, we'll bring you the latest on the TikTok ban as the company argues the US disregarded its national security plans. Plus, Masayoshi Son announces his vision for an era of artificial super intelligence. We'll bring you the details. And car dealer chaos continues amid a debilitating cyber attack that's upending the $1.2 trillion market. Full coverage coming up. Happy Friday to those of you around the world. This is what markets look like over the course of the week. But remember, we had a market holiday here in the United States on Wednesday. This Friday, the market is facing $5.5 trillion of derivatives that are due to expire, the so-called triple witching. That's having an impact on markets. But right now, there's this conversation around valuations, particularly in some of the mega caps that have seen a really AI-driven rally. Later in the show, we're going to go over some charts and have a brief conversation about one name in particular, Apple. But I'd note this Friday that NVIDIA is down a couple of percentage points, coming off what's been an astonishing rally in that stock, and that is having a factor in the markets. We're also going to talk about Bitcoin, that it's near a one-month low right now. There's a lot going in the market. We'll go in-house to Bloomberg Intelligence to ask some key questions about what's going on with Bitcoin. Let's get to our top technology story. TikTok and its Chinese parent ByteDance are arguing the US government could have put more options on the table and taken less restrictive action than simply banning the app to address national security concerns. In a court filing Thursday, TikTok said that Congress disregarded a 90-page national security agreement that was made with the federal government, in which TikTok argues it offered multi-layered safeguards. Let's get out to D.C. and Bloomberg's Mike Shepard. Mike, you lead the intersection of tech and politics for us. Basically, what they're saying is we offered lots of options. We offered you technological solutions that we think would have safeguarded U.S. user data, and the only option Congress gave in return was an outright ban.
Well, that's right, Ed. And let's step back for a minute. This TikTok saga has just become such a focus of attention here in Washington because of all of it symbolizes. It's not just about the app. It's also about this geopolitical tension between the world's two largest economies and their visions for how governance should be handled. And the concern here in Washington that the Chinese government ultimately could have access to U.S. user data through TikTok's Chinese parent company. Now, TikTok and ByteDance, the Chinese parents, have claimed that their setup, this so-called Project Texas, where they invested almost $2 billion and worked with Oracle to try to set up some sort of a shield and firewall that would keep U.S. data secure and away from any purported prying eyes in Beijing. That was not enough to satisfy U.S. lawmakers. They were aware of the proposal. They were aware of the project. And Senator Mark Warner, who heads the Intelligence Committee, expressed skepticism from the start that that would be an adequate safeguard to satisfy lawmakers' concerns.
It's difficult for users of TikTok, and in this country there are 170 million or so of them, and for the public to kind of get a sense of where we're at. So after this legislation made its way through Congress, legal challenges were brought by TikTok, ByteDance, its parent company, but also the users themselves. When the court filing hit last night, the DOJ came out with a statement and said, you know, the legislation accounts for a lot of the issues we were worried about. A long preamble to ask, Mike, where do we stand? What happens next?
Well, right now we are in that kind of tennis match of court filing. So it was TikTok's volley yesterday, and now we're waiting for the Justice Department to return the serve. They face a July 26th deadline to respond with their own brief papers. And then in early September, we're expecting the appeals court here in Washington to hear this case. And the company is asking for a ruling by December 16th or so, so that if need be, it can go straight to the U.S. Supreme Court for an emergency injunction if it doesn't get relief here at the appeals court level. So it's moving fast, but so much of it is happening in court. And it will really come down to a handful of judges to decide whether the national security concerns raised by Congress override and overwhelm any free speech concerns and considerations that the company is raising as part of its bid to overturn the law.
Bloomberg's Mike Shepard, Washington, D.C. Thank you so much. Let's get to another story in the realm of social media. New York has become the first state in the nation to place curbs on how social media platforms present content to minors, under a measure signed by Governor Kathy Hochul yesterday. Platforms such as TikTok and Instagram will now need parental consent to use algorithmic feeds or notify underage users between midnight and 6 a.m., according to the language in the bill. I want to break that down with the Chamber of Progress CEO, Adam Kovacevich. I was interested, Adam, to read through not just the content of the bill and what it will provide for, but also the idea that New York did this first. What do you make of it?
Well, what I make of it is we know there's concern among parents about kids and teens and social media, and I think that's understandable. Unfortunately, I think that in this case, they went after the wrong target, which was algorithms. I think they got into their head. And a variety of critics have focused on algorithmic feeds as being kind of a problem here. And so the bill, as you said, bans algorithmic feeds in services like TikTok and Instagram, YouTube by default for teenagers, unless their parents opt them into those algorithmic feeds. And just the problem with this is that I think that chronological feeds are actually going to be a worse experience for teenagers. They're more likely to surface, the last post that might be spammy, clickbait, hate, harassment, and algorithms are actually providing a pretty important role in making these feeds better for teenagers. Usually they're allowing them to curate their experiences. And Common Sense Media, which actually ironically is a supporter of this bill, actually had a survey of teenagers about 2 weeks ago where they said most teenagers are liking, or actually use curation in their feeds. And unfortunately, this bill kind of will do away with that completely by default. So unfortunately, I think it's well-intentioned, but it goes after the wrong target, in my view, and I think is likely to make feeds worse for teens.
Adam, the Chamber of Progress, of which you lead, is basically an industry group, but
Right.
your work is to look at public policy and make sure that it is impactful to society in a fair way. So you think that they went about this in the wrong way. How would you have done it differently?
Well, I think what we're starting to see is, for example, this week in California, the Governor Newsom talked about, well, maybe schools should have a blanket rule against phones in school. They're proving to be a distraction. I think there's pros and cons of a policy of like that. But one thing about those policies is they're not getting involved in regulating platforms at the speech level. One of the things we've seen, and again, New York's not the first state to do a bill related to social media and kind of content. They've gone about it a little bit differently. But one of the problems that all of these laws have faced, and now this has happened in California and Arkansas, in Ohio, every single time state legislators say, well, no, we're not regulating the content of these services, we're regulating their design, right? And that's different. That therefore it doesn't run afoul of the First Amendment. Every single time so far, courts have said, no, that's actually not true. You are regulating the platform speech. And I expect the same will be true here. So I think we have kind of this dynamic where this bill feels really great to Governor Hochul and policymakers who pushed it, but it will, in my view, inevitably be struck down in court. And then I think, we'll be right back where we started from. So unfortunately, I don't see a lot of legislators saying, look, how can we approach this in a way that is really like constitution proof, legally sound? They've asserted that it is, but I don't think this will be in the end.
Adam, I want to go back to the latest on TikTok that our editor, Mike Shepard, was giving us from D.C. a few minutes ago. This is not a new conversation for you or I. The idea that, TikTok and its users have frustrations, that they feel they put forward technological and policy solutions that would have allowed TikTok to continue to operate in this country. And they feel the only option that they were given by Congress was a ban. What did you make of the court filing which hit last night?
Well, I think what TikTok is trying to do in their court filing is they're trying to address what's called sort of the least restrictive means, right? Which is to say that if you're concerned about TikTok and Chinese connections, for example, is there some other way the government could have gone about addressing that concern short of passing the law that it did? And that's what their Project Texas is all about. And that is legally relevant at this stage because that is an actual principle under the law. And so I completely understand why TikTok is doing it. I have a concern about TikTok and Chinese control, but I understand that. And ultimately, right. I actually think it's kind of a jump ball. I think whether or not TikTok succeeds in its legal challenge is truly a legal jump ball. And so it's completely understandable to me that they would make that argument.
But what is the Chamber of Progress's position on whether TikTok should be able to operate in the United States?
We haven't taken an organizational position on it. I think that I share a lot of concern that this is a really unprecedented situation where an app that is so popular, frankly, has this nexus and really is obligated to advance the Chinese government's interests. That's always been a concern for me, more than the data concerns, more just kind of like the idea that look, after Russia invaded Ukraine, we look back and said, why did we allow RT, Russia's propaganda network, on our cable systems? And I think I feel the same way about this.
Chamber of Progress CEO Adam Kovacevich, thank you. An intense start, actually, to this Friday's Bloomberg Technology. Coming up, we're going to be joined by Fiona Cincotta from City Index. We're going to dig in on markets. But at the top of the show, I mentioned valuations. And here's a name where valuation is a concern. Palantir, the stock down 4.8%. Biggest drop since May 7th as it stands. Brian White, an analyst over at Monness Crispi, basically saying it has a gluttonous valuation. And he's pretty concerned about these software names with a higher multiple, and he's worried about earnings season. But there had been a lot of momentum behind Palantir because of its AI story. We will continue to talk about valuations throughout the hour. Stick with me. I'll be right back. This is Bloomberg Technology. Okay, you're about to be looking at the US listed shares, or ADRs, of Softbank, the Japanese tech conglomerate. Kind of like Japanese trading overnight, down the most in about 3 months. Overnight, founder Masayoshi Son pledged to help create AI that's thousands of times smarter than any human. At SoftBank's annual meeting, he outlined a future that's built on SoftBank's investment in the chip design firm ARM, and argued that ARM's technology will go into a thriving ecosystem of robots and powerful data centers. And at times, Son was visibly emotional, talking about his goal of realizing artificial superintelligence.
It may sound strange, but I think I was born to realize ASI. I am super serious about it. I think ASI will continue in the next 10 years. It will be 10 times smarter than humans.
So SoftBank's Japan-listed shares are up almost 60% this year, and the net asset value of its holdings has hit $214 billion, largely on ARM's performance and a turnaround in some of its startup bets. But activists are circling. Elliott Investment Management has built a stake in SoftBank of more than $2 billion and is calling for buybacks. Son brushed off questions and pleaded with investors to, quote, root for him as he chases his dream of artificial superintelligence. Joining me now to discuss the markets and a bit about SoftBank is Fiona Cincotta from City Index. I mean, what was so interesting about this kind of spectacle almost in SoftBank's annual meeting is Masayoshi Son wanted to talk about the big picture, ASI, but investors wanted what investors always want, dividend, buyback, stock split. What did you make of that?
Yeah, completely. I think it's quite an interesting because it sort of almost brings up about a change of strategy for SoftBank from this sort of defensive position that I think it has had over the past few years for a much more offensive position as we have this really ambitious vision from Son about ASI and the future of AI and what that means for SoftBank. But I think you can't get away from the fact that at the end of the day, investors do want to have returns. They have seen strong gains on the share price. You know, as you pointed out, we've seen a 60% rally in the share price so far this year. That obviously comes on the back of a 124% rally in ARM Holdings. But, you know, at the end of the day, yeah, investors want to see what those numbers are bringing back, and they want to see, you know, share buybacks. That's going to be useful for them as well. Although, as we said, you know, the share price growth has been strong.
It's hard to pick out what the prevailing factor is in the market right now. You know, at the top of the program, we talked about the concern with valuations. Nvidia is trading at 45 times 12-month forward earnings. We're going to look at Apple's valuation later in the program. And then if you take the Softbank example, like many investors, to summarize, there just seems to be a wholehearted belief that you have to be in AI at all layers of the stack, and if you're not, you'll be left behind. So which comes out on top?
Yeah, you know, I think we can't get away from this idea that AI has really driven such a strong rally in AI stocks, and obviously that's sort of bled out into or transferred out into record highs in the S&P 500 and on the NASDAQ this week as well. So, you know, I think at the end of the day, there might be this sense that perhaps the AI trade right now is a little bit overhyped. But I think over the long term, that's just not the case. And that's the sense that investors are having. You know, we're just really opening the door to the realization and the understanding of what the real world applications of AI actually are. And that's what's really supporting the rally that we have seen. So, you know, although, as you mentioned, there are some suggestions that there could be some level of lofty valuations involved here, I think at the end of the day, the long-term case is very bullish as far as AI is concerned. And that's really supporting the share price. Obviously, we're going to have some pullbacks. You know, no rally is just 100% higher.
Sure.
But I think, you know, investors are in. They're in on this case.
We just showed Nvidia. It's down 2% in the session, but over the course of a week where it became the world's most valuable company, it's down a percentage point. Is this rally over?
Yeah, do you know, it's just a very small move lower after some very strong moves higher. You know, this month so far, Nvidia's up around 16%, had impressive gains last week. I mean, I don't think the rally can necessarily maintain the speeds that it's had, because it has been a really impressive speed that we've seen this share price rocket. You know, it's up 170% so far this year, and that's not maintainable. It's not going to be maintainable, but I don't think that's to say that the rally's over. I think we could just perhaps potentially expect it to slow to a more sustainable pace going forward.
Fiona, Cincotta, City Index. Happy Friday. Have a fantastic weekend. And thank you for joining us on the show. Coming up, OpenAI makes its first big and genuine acquisition. We're going to bring you the details next. Be right back. This is Bloomberg. Time for Talking Tech. And first up, former President Donald Trump finally appeared on the All In podcast. After a month of teasing, the podcast, co-hosted by David Sachs, Chamath Palihapitiya, covered a range of topics, including real estate, the war in Ukraine, and artificial intelligence. Trump defended his tariff proposal, saying it would be crucial to keeping the dollar the world's reserve currency. Plus, Huawei nears 1 billion active devices. The Chinese tech company saw sales of its smartphones climb 72% in the first 5 months of 2024, growing the number of Huawei's gadgets, which also use its operating system, to over 900 million. The latest figures underscore how the US-sanctioned company is taking on the likes of Apple in the Chinese market. And Indian grocery delivery startup Zepto is preparing to go public. This after the company more than doubled its valuation to $3.6 billion from a financing round that was led by US and local investors. The company says it's on track to handle more than $1 billion in goods a year and plans to double its warehouses to more than 700 by 2025. Also, car dealers aren't the only ones to be hit by recent attacks. The data of Quote Wizard consumers, a LendingTree subsidiary, are being sold off by hackers. Unauthorized access was detected on a cloud database hosted by Snowflake. LendingTree shares are down as the company continues to investigate the size and scope of the hack. All right, let's get some M&A. OpenAI has bought Rockset, an enterprise search and analytics startup, marking the most significant acquisition to date for the high-profile artificial intelligence company. Joining us now, Bloomberg's Shireen Ghaffari. So this was kind of interesting. The terms won't disclose. We don't know how much money was involved, basically. But it's kind of new and novel for OpenAI. Give me the details.
Right. So this is the first time that OpenAI is acquiring a company where they're not just taking in the talent or doing what's called an acqui-hire, but they're actually going to integrate the technology as well, which makes this significant.
What I don't understand is why does OpenAI need a company like Rockset? Like, what's the point?
Well, if you think about it, OpenAI is really right now trying to grow not just their consumer, but their enterprise business. And this is a company that has experience working with major customers across industries, from finance to gaming. One big one that I saw in previous reports was JetBlue, for example. And what they do is actually work with customer data to help those customers index and search through that data. So, if you kind of put two and two together and think about where OpenAI is trying to grow their business, it might make sense that they would go acquire a company that's specialized in dealing with this kind of more detailed business data to help them build that out.
Bloomberg's Shireen Ghaffari, I have to say, it's been a tremendously busy week for you, all across the AI beat, from Anthropic to OpenAI, and a lot going on in enterprise as well. Happy Friday to you, and have a nice weekend. All right, coming up, we're going to discuss the recent cyber attacks on CDK software with Diana Lee from Constellation. The team over at Bloomberg News has done an incredible job of basically wrapping up the past 48 hours events on CDK. But what does it mean, bigger picture, in a cybersecurity context? What does it mean for a massive industry for the buying and selling of vehicles? We're about to show you some beautiful pictures. Stick with us. We'll be right back. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. So I've been talking about valuations, and there's one chart that I saw this morning on the terminal and on Bloomberg.com that I wanted to share with you, and this is it. Apple trading at around 30 times forward earnings. And there's been a rally in Apple shares driven largely by artificial intelligence, the idea that we now have a clearer understanding of Apple's AI strategy. A lot of concern from both the buy side and sell side is, well, when does that strategy pay off? If you look at Bloomberg estimates for top-line growth, there is some recovery in the second half 2024, later in the year. But as the chart behind me shows pretty clearly, when Apple gets to a level of trading at 30 times forward earnings, it historically finds it really hard to sustain that level. And this is a conversation that's happening quite a lot across the mega caps, where we're trading. We keep referencing NVIDIA trading at 45 times forward earnings. There's going to be loads of you out there. Contact me on X, LinkedIn, Instagram. You're going to say, oh, well, look at top line growth of the two. You can't compare. But I'm just saying this is a chart that's got a lot of investors talking. We're happy to share it with you on Bloomberg Technology. OK, let's get back to cyber security and hacks. Checking in on shares of all the automotive companies. Lots of the car dealers, lots of the retailers, and you can see some downward pressure sustained. AutoNation down 0.4%, Group 1 Automotive down 0.5%, Penske kind of stabilized, and there's a warning. CDK is the company that basically operates the software platform, and they've warned their customers that their platform's going to be down for several more days. It's crippling car dealers across the United States amid a cyber attack on the company, the second round of which was felt on Thursday. Joining us out of London is Bloomberg's Craig Trudell, who's our global autos editor. And Craig, you're joining us from London. This attack was in the US and Canada, but you've kind of been leading the team that's been covering this around the clock. And the impact on this industry has been very big. We got a news story out on the terminal this morning. Just summarize it for us.
Yeah, I mean, this came at a really inopportune time on the Juneteenth holiday. For car dealers, a day when a lot of their customers or would-be customers, have more time to go through the rigmarole of buying a new car or getting their current vehicle service. For their software system to go down has been extremely disruptive. We also have an end of quarter push that we're in the midst of, which, retailers do want to sort of close deals before the end of the month, before the end of the quarter. So this has been a really disruptive attack because there's only a handful of these companies that provide these dealership management systems that CDK is one of the leading providers of. So for them to go down and not be able to sort of provide those services for their many customers really has thrown a wrench in things. So we're hearing from dealers about, having to close deals with pen and paper as opposed to, going through their computer system. And, it already takes time to close deals, as we know. It's not even in the year 2024 a seamless process. This is only throwing sort of more of a wrench in things.
Pen and paper. I don't even know what that is anymore.
Stone Ages.
There is a serious side of this that, in the US and Canada, if I'm a consumer and I'm participating in this end of quarter sprint to get myself a new vehicle, what are the brand names involved, those impacted? I think I read Subaru and maybe Toyota.
Yeah, Subaru and Toyota, at this point, at least out of Japan, have sort of downplayed this for us. And we are touching base with them in the U.S. and have heard from the likes of Ford and Volkswagen, Mercedes, BMW. All of those last few companies I mentioned have confirmed that their dealers use CDK. They're not necessarily being particularly forthcoming at this juncture about how many of their dealers are affected, but this is a substantial number because, again, this is a space, a sort of sliver of the auto retailing industry where there's been a lot of consolidation over the years. So you only have a handful of companies that aren't necessarily household names that provide this really important sort of, piping that makes everything work. So, we've heard again from dealers also talking about challenges with lining up credit, having to sort of, themselves make judgments as to whether or not, somebody is worthy of a loan by sort of cobbling together what information they can, parts repairs and not being able to sort of confirm whether or not a part is available for a customer who has a Jeep, say, in the shop. So this is just causing a mess. And so if you're a consumer, I guess the general sort of takeaway here is if you're planning to go to a dealership this weekend, maybe hold off on it and wait until the storm passes.
Bloomberg's global car editor, Craig Trudell, great to have you on the program. Thank you. Let's bring in somebody who knows the automotive space very well. Diana Lee is the CEO and co-founder of Constellation, the leading marketing technology and data intelligence company in the automotive space. Personally, you have 3 decades of experience in the world of cars. And, I think what our editor, Craig Trudell, set out is that the timing of this hack is bad because the industry is under so much pressure. What are you hearing from clients, customers, and those you work alongside?
Absolutely. It's just mass chaos at this point. I've been in the auto industry since 1989 and also in retail automotive. In all of those years, I've never seen a DMS operating system down. The dealer requires to actually run a DMS for sales, service, parts, for every single functionality, even stocking in a vehicle you can't do without the DMS system. So it is a disaster. I feel like it's even worse than COVID when it first hit the dealerships, because you're not functioning at this point.
So what you just said really jumped out at me. Worse than COVID, the impact, because I remember covering that. That was my beat, March 2020, working for Craig, who was my editor. Let me ask you this. If you were advising CDK and telling them what to do to manage this fallout, what would you suggest?
I think it's printing services at this point. I know that sounds so crazy, but at this point, nobody can actually just have a DMS pop up overnight. So there's only two other DMS providers that are really known in the automotive industry, and it's Techion and Reynolds. So there is no way that either one of those companies could start, uploading any type of DMS system for any dealers that are down. But printing services is what basically anybody can do right now, right? Which is loading up the printing services to allow dealers to be able to hand print contracts, as well as all the ROs, repair orders, that need to happen right now. So we're going back to ancient stages right now where this is what we need to do, is print.
We joked with Craig about the use of pen and paper, something we will do a lot less in this day and age. There's a serious side of it, though, right, which is the consumer and the consumer psychology. You have very high interest rates. Buying a vehicle, or even leasing a vehicle, is your biggest financial consideration after your home, normally. And we have, 9 days left of June. Do you think this is going to have a really big impact on sales in the sprint to the finish of the quarter?
It's absolutely going to. And I think the only way that a lot of these dealers can actually survive right now is if they have friends of theirs that already have a Reynolds or a Techion system where they could tell them what the deal structure needs to be, so they could actually put something together, at least fax it to them, email it to them, and then you're going to have to handwrite every single contract at this point.
Right.
But the only way, and I think dealers that are super innovative, they've called me and they said, I'm limping right now, limping. I mean, this is some of the biggest dealerships in the country that sell 1,500 units a month. Their service departments are limping at this point. But obviously, they're like fighters. And I love that about dealers, because in many ways, think of all the employees that basically are also under fire. But if the auto business goes down, and this is why I really fight for dealerships out there all the way across, it's all the Americans that would also be out of jobs if we always go direct-to-consumer plans. And
so let's discuss modernizing then the dealership model, right? I just leased a Model Y a couple of months ago. I did it through the Tesla app. My credit was approved through the Tesla app. I took the wing mirror off after 2 weeks. It was fixed through the Tesla app. Is that something that the industry needs to move toward?
I am not actually a fan of the Tesla model, in the sense that basically I understand this is a direct-to-consumer model that makes it easier for customers to buy a vehicle. But on the other hand, I think that the traditional automakers have to improve the customer process, but within it, there's so many people that actually support the automotive market. Think of all of the families and the communities, as well as the little leagues and all of the different types of charities within every community that gets supported by a local dealer. All of that goes down if basically we all decide, hey, we want a direct-to-consumer model. What happens to the Americans that will be out of jobs right now if everything went straight direct-to-consumer? And for me, I really do believe in that community atmosphere where we come in, we get to know each other, we get to actually service our vehicles, but get to know the people within the organization that support those communities. So I think there's different types of people out there that purchase vehicles, but there's many types of customers out there. They must test drive the vehicle, look at the vehicle, know the color and the exact model that they want before they actually make a purchase. And those are not ideal for customers that are direct to consumers.
Diana Lee from Constellation Agency, just great to have you back on the program. Thank you so much. Okay, coming up on Bloomberg Technology, we're going to talk about investing in artificial intelligence with Shardul Shah of Index Ventures. That's coming up next in our VC Spotlight and private market focus for a minute. This is Bloomberg Technology.
Things I really get excited about, because I'm a labor economist by training, and I think a lot about the distribution of opportunities across the nation and the world. And I think of AI as potentially being a great leveler, leveling the playing field, democratizing the expertise by giving people a hand up or a leg up in terms of starting.
That was San Francisco Fed President Mary Daly weighing in with her thoughts on the impacts of artificial intelligence. And I want to get more on that space with our VC Spotlight and bring in Shardul Shah, a partner at Index Ventures. And Shardul, it is June 21st, as I've just learned on Google and Wikipedia, summer solstice, the official start of summer. And I'm going to start this conversation by asking you, are we in the private markets in an AI winter, an AI spring, or an AI summer?
First, Ed, thanks very much for having me. It's my pleasure. It definitely feels like summer. The sun is shining in venture land, not only in AI, but outside. AI is definitely bringing a draft and a windfall to different industries, including cloud and cyber. And it's led by public market companies. If you look at a cloud derivative like Datadog, which I've served on the board of for 10 years, they're definitely seeing acceleration in underlying markets thanks to the cloud. And use of AI driving increased compute and increased use of data. Second, in private markets, we're definitely seeing market-leading companies like Wiz and Databricks see acceleration in their business thanks to AI. So definitely the VC environment is talking about AI.
I want to look at deal activity in the private markets. You just mentioned that the AI summer that we're in is kind of led by public names. And throughout the hour, we've talked about the concern around valuations. But deal activity in the private markets is really interesting to me, globally and at all stages. Like, I'm seeing quite a lot at the growth stage as well. Do you see that, and what do you make of it?
You're right. We're seeing increased activity this year across geographies, across stages. Again, outside of AI, half of the investments that we've considered at Index in this year are in categories including gaming, in fintech, and cybersecurity. So the sun is definitely shining outside of AI. Second, to your point, it's at every stage. We've seen seed investments, early stage Series A investments, as well as growth stage opportunities in and outside of AI. So deal activity has definitely picked up this year.
You've put a lot of emphasis on security, cybersecurity names. Wiz is one of your portfolio companies. You are significant on the cap table of that company. Why? Why is cybersecurity such a focus? Loads of people come on this show, actually, at the moment and put forward cybersecurity as the area that they're most excited about getting a boost from AI.
Yeah, cybersecurity is one of the hottest sectors in tech, so it's no surprise that you've had many guests come on and talk about it. If you step back, there's about $250 billion of market cap amongst the top 4 security publicly traded companies. This is CrowdStrike, Palo Alto Networks, Zscaler, and Cloudflare. 10 years ago, the top 4 probably represented less than $50 billion of market cap. There are 4 drivers over the last decade that have driven this growth. First, we're seeing every single day a new global attack. I think on your show, you've been talking quite a bit today about CDK Global, which is just the most recent example. Second, the SEC now has disclosure requirements for publicly traded companies. Third, chief security officers are under scrutiny and are being held accountable for fraud. And fourth, we're seeing hackers actually tell the SEC when they've created a material breach. As a consequence, we're seeing an enormous amount of activity in private markets. We've seen an explosion of startups. There's now over 10,000 companies that are trying to build new businesses to meet the needs of customers. At Index, we focused on kind of two primary themes. One are founders that are obsessed with the problems of their customers. And second, founders that are looking to build coherent platforms to meet the needs of organizations. Just as one example, to your point on summer, I feel like every small and medium business in the world should have insurance. Without insurance, it's like going to the beach without sunscreen. You're bound to get burned with enough exposure. And so we invested in the category-leading cyber insurance company, Coalition, which is addressing the needs of small and medium companies. On the other hand, enterprises have been served by large and growing security companies for over a decade. What's different now is the requirement for a coherent platform versus kind of a Frankenstein that acquires their way to creating a collection of solutions. And therein lies Wiz, which, to your point, just started 4 years ago, but has become the fastest growing software company of all time because of a strong point of view on a product that meets the needs of customers.
A lack of cyber security is like going to the beach without sunscreen, which on this, the official summer solstice and the AI summer we're in, is an interesting point of view. Shardul Shah of Index Ventures, great to have you on the program. Thank you so much. Right, coming up, we haven't talked about it much since the top of the show, but Bitcoin reaching its lowest level since May. As risk appetite subsides, we're going to go in-house for this one with Bloomberg Intelligence. Be right back. This is Bloomberg Technology. Bitcoin slumped to a more than 1 month low with this year's record-breaking rally showing signs of fatigue. In the absence of, frankly, fresh market catalysts, let's break it all down with Bloomberg Intelligence Analyst, James Seifert. Sorry, it's been a long, short week for me. I'm trying to think about what's going on. Like, in the markets, generally speaking, maybe some risk appetites come off the table, triple witching. But there is this kind of close or opposite correlation with the equity markets. That's what I've read. What's your analysis?
Yeah, I mean, no matter how you look at it, I don't even know what the word is, the appetite for Bitcoin exposure has slumped. A lot of people were talking about trying to understand. So the last few weeks, we saw billions file into those Bitcoin ETFs, and the price really wasn't moving. A lot of that we think had to do with like potentially futures trading and basically arbitrage trading with the futures market. But the last week, the last 7-ish trading days, we've seen a total of about $1 billion flow out of the ETFs. Risk appetite on the crypto markets has kind of slumped off. I mean, if you look at all the altcoins and all the stuff that we don't really tend to talk about, those have been far worse than the likes of Ethereum and Bitcoin. But what we're paying attention to right now is we're expecting those Ethereum ETFs to get approval at some point from the SEC, over the final approval to launch at some point in the next couple of weeks. I think there's just kind of a malaise going on in the market right now, and it's pretty standard. I mean, honestly, everyone's used to these massive run-ups, but also there's corrections and turnbacks at different times.
That's the functioning of the market. I still follow the headlines a lot. One that hit last night was that MicroStrategy had used the proceeds from a convert to buy $786 million of Bitcoin. And we've reflected a lot in the last few weeks. Like, it's quite a liquid market, and correct me if I'm wrong, but does a headline like that have impact on the market at large?
It used to. I mean, when Michael Saylor was announcing and MicroStrategy was announcing these massive multi-$100 million buys of Bitcoin, it was impacting the markets. I think it kind of almost shows the maturity of the market that they finished this closing of those converts and then just dumped $780 million or whatever, I don't know the exact number you said, into the market over the last week or so. And the market is still down decently off its all-time highs, almost $10,000 off its all-time highs. And I think that just shows the liquidity and depth of this market at this point, as far as I'm concerned.
$786 million was the number that I said. Bloomberg Intelligence Analyst James Seifert. Happy Friday. Thank you. Appreciate the breakdown. That does it for this edition of Bloomberg Technology. It was a short week in the US. Wednesday was a holiday, but a busy week all the same. Recap the podcast. Get involved in the pod. Find it on Apple, Spotify, iHeart, and The Tech Pod is also, of course, on all the Bloomberg platforms. It's good to be back here in San Francisco with you. A big week coming up next week. AI, Bitcoin, space, all of that's to come. There's beautiful San Francisco. Happy Friday. This is Bloomberg Technology.